Ladies and gentlemen, I just want to get the confirmation here, making sure everything's back on. It seems like it. Ladies and gentlemen, I think we're back. There was some odd audio issues going on. It seems like that always plagues us in the opening moments of whatever Dylan Holy experience we do, but we're all good. It's been troubleshooted. Thank you for patiently waiting. Let's continue on. Investors have been watching earnings season closely for insight on how companies have fared amid high inflation and clues on how they're managing going forward. In the regular trading session, the Dow Jones fell by 207 points, or 0.6%. The S&P 500 slid 1.1%, and the Nasdaq Composite dropped 1.7%. The next phase of this 2023 rally could depend on the Federal Reserve's next steps on inflation. And this is coming from today. This isn't a week ago. This is from today. Earlier this week, Fed Chair Jerome Powell said inflation is easing, but rates could still rise. Now, we talked about the Federal Reserve rate increase over on the Dylan Holy Twitter account, which I guess brings us into our first plug of the evening at Real Dylan Holy. This is where we give you breaking news. I mean, I'll spoil some of this right now. We just posted on here about Disney's massive restructuring, planning to lay off 7,000 employees, roughly 3% of its workforce, cut $5.5 billion in costs, including slashing $3 billion in content investment, basically meaning like new IPs and projects. Bob Iger has come in and was like, nope, we're axing $3 billion worth of these things. And it's reorganizing Disney as the corporation into three primary segments: entertainment, which is their Disney Plus and content operations; ESPN, which includes the actual TV network of ESPN and the streaming service ESPN Plus. They are no longer, I repeat, no longer looking to spin off ESPN into a separate company. And lastly, the third segment being parks, experiences, and products. So basically, and actually, you guys are about to see some crazy stuff here. Can we still edit this? And we're going to, because live on the air, we caught a grammatical error, and you already know that I am not the biggest fan of grammatical errors, so we're going to change it. We're going to do it on my phone, and we're going to keep the actual goods away from the millions, but it's been changed now. So if we take a look here, okay, come on, show me the new one. There we go. It's been edited, and try to spot the difference. You have fun. But yeah, so Disney had a pretty killer earnings report today, and I guess we can jump straight into that. Disney beats on expectations as streaming subscriber losses aren't as bad as feared. And give me one more moment. I just want to make sure we are good. Yep, the audio is all good, so no sweat there. Disney beats expectations as streaming subscriber losses aren't as bad as feared. Disney reported fiscal first quarter earnings today that beat on the top and bottom line. This is Bob Iger's first earnings report since returning to CEO in November, last November that being. A recent price hike for Disney's streaming services likely led to the loss of around 2.4 million Disney Plus subscribers in this quarter. But if we look at the actual total subscriptions that Wall Street was expecting them to have, which was 161.1 million, they actually beat on expectations, earning 161.8 million. Listen, man, Disney Plus is a staple. All right, if we're talking like iconic IPs and IPs that people are going to consume, Disney Plus is the way to go. I mean, like, Netflix is cool. Listen, bro, Netflix has I Think You Should Leave, and Netflix has Big Mouth, and that's good enough for me, damn it, because I love those two TV shows. Peacock now has the WWE subscription plan and any NBC IP. So, like, dude, basically all I watch is, like, The Office, Parks and Rec, and WWE, and somehow Peacock fucking is like my perfect, it is like my Venn diagram streaming service. Like, if you guys are looking at like the Venn diagram, as Kamala Harris would say, who here loves Venn diagrams? Don't you love Venn diagrams? I love Venn diagrams. Let's talk about Venn diagrams for a minute. No, dude, Peacock, like, this is like, that is the Venn diagram of like my two content consumption from traditional media sources. It's like just simple like sitcom stuff, and then WWE, and somehow Peacock has both. So let's run it back. Yeah, I think, no, Disney, like, people are not going to, I think people are going to keep subscribing to Disney Plus. And obviously they lost, like, some people, but dude, they still have 161.8 million total subscriptions. Not people actually using that platform, because I'm sure that's significantly higher. It's there honestly might be 400 to 500 million people actually using Disney Plus subscriptions. In the same way, I think there's probably like at least like 500 million to 1 billion people using Netflix as a service. 2.4 million, obviously losing that is not fantastic. It is less recurring income coming from subscribers, but dude, they still have 161.8 million people using it. And I think overall they're still probably going to grow. But if we scale it back even further, like we talked about with the cuts coming to Disney content, that $3 billion cut cap coming to Disney IP and content, it's definitely going to play a factor in trying to keep those people on. I was talking to Adrian about this he was here up in Northern California about a month ago, and we were talking and I was talking to him about this, like, the content model that legacy entertainment institutions have, which is basically like, okay, we invest into this IP or into this project, and then we sell it to people and make money. That is just unsustainable. Like, if you look at Netflix's business model versus YouTube's business model, dude, Netflix is toast. YouTube has more content, more free content being uploaded every single day by people who do it for free. I'm literally streaming to you live on YouTube right now. Same thing with Twitch. Like, content creators are going to these platforms and they're basically giving YouTube this content that they can then monetize, and then the content creators make money. But there's no upfront investment from YouTube in most cases. In most cases, there's no upfront investment that YouTube has to make to content creators for them to upload it to their platform. Versus Netflix, dude, they have to drop, $100 million on a project. Disney was clearly spending too much. They were spending $3 billion too much on their content. And yeah, now they're scaling back. They're also making cuts to just like $2.5 billion in miscellaneous spending. If we also take a look and run it back, we can take a further look at it. Disney's going to be laying off 7,000 employees, about 3% of its workforce. And who knew that Mickey Mouse, after this quarterly report, smoking weed and eating some Doritos? He's also a part of Major League Gamers, so that's absolutely absurd. Anyway, at Real Dylan Holy on Twitter. Let's continue on. Disney, overall, they made 99 cents per share. against the 78 cents per share expected. So they beat on the earnings per share and their revenue, where they were expected to earn $23.7 billion. They made $23.51 billion. So they beat on revenue and earnings per share. Did some corporate restructuring. You can't really get much more from like a hard ass like earnings report. They made money, and they're also gonna change how their company operates to make more money in the future. Ideally, at least from their perspective, that's what they're doing. So, you can't really ask more for that. That being said, maybe this is a little personal wish of mine, but I was hoping that they would reinstate their dividend. And Disney, according to Deadline.com, and CEO Bob Iger, who they directly they got this quote from in this story from, Bob Iger has asked the board of directors at Disney to reinvest the dividend by the to reinstate, a dividend by the end of its calendar year, So what makes this so significant to me is, one, I absolutely love dividends. And if you take a look, Disney actually suspended its dividend in early 2020. So January of 2020, they suspended the dividend, and they weren't paying it for a while at all. Like, they were not paying any dividend. It has completely flatlined since 2019. And now anyone who's holding Disney stock, I'm sure the actual dividend, if they're looking to do a full restructuring of it, I would assume that it would probably start out a little lower. I mean, their yield is like 1.23%, so it's not the highest. But I do think that, dude, like, I do believe that there's a lot of growth potential in Disney. I think Disney, I'm not gonna not bet on Disney. I will say that I'll have to see what happens with this dividend and if and when it gets reintroduced, what that's going to look like. But I do like Bob Iger at the helm. I like Bob Iger a lot more than Bob Chapek. Disney is still like a woke corporation that is doing like their psyop stuff, but what corporation is that not in America? Come on, guys, running psyops and feeding people propaganda and bullshit. Come on, guys, that's just every American corporation. Speaking of American corporations, big oil last year in America. So we're talking BP, Exxon, Chevron, your ConocoPhillips, if you want to throw them in there. Last year, they made $199.3 billion in profit, benefiting from the surge in oil and gas prices that followed Russia's invasion of Ukraine. So, lo and behold, all of the big oil companies, they finally did their Q4 2022 earnings. And who would have thought that oil, being the most volatile thing to come out of 2022, who would have thought that the big oil companies made it big when oil became like a thing that people actually were bargaining for and talking about in terms of like a scarce resource on the world stage over the last like 10, 15 years. It's back. Like, and it's not saying that oil wasn't a political bargaining tool for 10 to 15 years, because it was. I mean, the entire world runs on petroleum, whether we like it or not. But for 10 to 15 years, they were talking about going to sustainable energy, renewable energy. We need to make investment into our climate energy grid. We need to go green. We need to go 50% green by 2050, man. I think we can still make that investment. I don't know how significantly better it's going to be than petroleum. I do think it will give more smaller countries that are net exporters or net importers of oil, so companies or countries that are actually buying the oil from different sources. I do think that it could give them more energy sovereignty. On the other hand, it's just as polluting as drilling for petroleum and refining petroleum. Like, digging rare earth metals is not clean, guys. They literally dump acid into the earth. They find a plot of land and they dump acid into the earth and then just take out the gold or the lithium or whatever rare earth metal you want. It's copy and paste. They do it everywhere. So it's not as clean as we think it is. And to run it back to big oil, yeah, people started talking about it again. People started realizing like, oh yeah, we're like still not fully off of petroleum yet, and we just pissed off a rogue nation that happens to be one of the largest oil exporters on earth. And we also have kind of pissed off OPEC. Like, we've pissed off OPEC and OPEC Plus just over the years, just kind of screwing them over, and the West critiquing basically the culture of these OPEC producing nations. And it's not like, oh, like every OPEC Dylan, are you saying that every OPEC nation happens to be Middle Eastern? No, I'm not saying that. Y'all are putting words in my mouth. But if we take a look at like the member countries, dude, we're looking at Iran, Iraq, Kuwait, Saudi Arabia, Venezuela, Qatar, Libya, the United Arab Emirates, Algeria, Nigeria, Ecuador, Angola, Equatorial Guinea, Congo, Gabon. And then if you want to take a look at some further OPEC Plus, and I guess we could actually just take a look at the Wikipedia for that, because it'll give us some more wider insight. But yeah, like if you take a look at OPEC and OPEC Plus, like most of these countries are countries that we've been talking shit on for the last like 10 to 15 years, if not longer than that. Like, we've been critiquing like their way of life, their politics, and not to say like this is coming from an American who does think that what like the Middle East does to women is probably not okay. I don't think that women should be forced to wear burqas, and if they don't wear a burqa, they get their hand chopped off and then stoned to death in a public square. I don't really know about that. I do know about that. I don't like it. I feel like that goes without saying. But people, they have been not only critiquing, but like insulting and basically pissing off whether or not it's valid or not, which I think most of it is kind of valid. But it's the social justice, like cancellation of these countries and us, already basically banning imports on like any type of culture they have and basically only using them for resources. Like, we don't give a shit about Saudi Arabia except for oil. We don't really, the Western European countries didn't really care about Russia except for their oil. The only reason like they kind of cared about Russia past oil was like they used to be part of they were in the Cold War and they used to be a superpower. I definitely think they have a shit ton of resources. But yeah, like we don't really care about these OPEC and OPEC Plus producing countries unless it's for their oil, and we started canceling them. I mean, dude, the entire West put sanctions, crazy sanctions on Russia last year, whether or not they were valid. Sanctioning could be used as a political bargaining chip, but typically speaking, countries that get sanctioned don't really want to compromise, and it seems like Russia isn't going to be doing that, and oil is now, again, a relatively scarce thing, and it got cheaper to make, and that's how big oil made $200 billion in profit last year. Again, I am an active shareholder in Chevron and ExxonMobil, and both of these companies had fantastic earnings reports, and I got my quarterly dividend from them with a smile on my face. Let's continue on with some companies that it's actually kind of on the opposite of what happened to big oil last year. It's like the complete polar opposite. Affirm is cutting 19% of their workforce and their earnings miss. Shares were down 17% after hours, and their second fiscal quarter in 2023, they were basically telling shareholders that they're going to be making less money. They are going to be cutting down, I guess, expenses, but that's what every company is doing, by 19% of their workforce. So obviously anyone who is getting laid off, best of luck to you. Y'all got it. Same thing going on with Alphabet, seemingly a vanguard in the market like a year or two ago. Their shares are down 7% following their AI event, talking further about Google Bard, which is basically their answer to ChatGPT. They're introducing Bard, which is powered by its language model for dialogue applications, or LaMDA for short. So LaMDA is basically like their AI conversation model. They've been working this into all of their Pixel products, their new Android features, which, like, I do think the LaMDA or LaMDA, excuse me, the LaMDA integrations that they have been putting in are extremely interesting. And I am interested to see what happens with Bard AI. But the reason why Google shares, and Alphabet shares for that matter, excuse me, I know it's not politically correct to call the holding company Google anymore, but Alphabet shares fall 7% because Microsoft, they also had announced not necessarily their partnership with ChatGPT that's been open and public information for a while. But what they did do was they basically talked about how they're going to start integrating ChatGPT into Bing and Edge, basically creating, from the dystopian Black Mirror standpoint, they're basically just going to have an AI finding out what ads you're most likely to click on and then show you ads. Obviously, they say stuff like, oh yeah, you're going to be able to browse the web and chat to Bing, like asking questions and getting stuff in natural language. But come on, guys, they're going to be taking that metadata, selling it to third parties, and giving you ads, because that's where the money is. That's how they make money. And Google, people are expecting Google to generally do the same thing, but they felt like it was kind of too little. So if we're taking a look at least this journalist's thoughts on the matter, they're suggesting that investors were hoping for more in light of growing competition from Microsoft. So yeah, like people, they thought that Google would be able to be capable of more. And I think them working their LaMDA stuff into Google is definitely a big step. And I think that it's probably going to be fruitful for them. But it definitely looks like Alphabet's been put on the defensive from Microsoft. Like, Microsoft definitely fired the first shot. Maybe that was them peacocking. Maybe that was them making us think that they have more than Google, and it's like a total psychological tactic. But no, I mean, like, AI is going to be, it's going to be AI and mixed reality. That's where the next wars in tech are going to be waged. It's going to be artificial intelligence and mixed reality. That's going to be the software, AI, and the hardware is going to be mixed reality. That's going to be it, dude. Like, so it's only just starting. I think this the AI stuff is definitely only just starting, and they are massive steps. I'm interested to see where both the LaMDA and ChatGPT conversions and integrations take Google and Bing, respectively. But yeah, if we're taking a look over at other things that happened in big tech today, Twitter has announced that they will be able to have tweets go past 280 characters, and you will be able to go up to 4,000 characters. Now, I was actually testing this out, and if we take a look again at this just post right here, so if you go past 280 characters, like this right here, you'll basically just get a show more, and then it'll expand it into a larger kind of thing. So, yeah, as someone who, I really struggled with 280 characters. I think if they really wanted to keep it semi-short form, I was talking to someone about this earlier, if they really wanted to keep it like semi-short form, short form content blurbs, they probably could have done like 420 characters, and like that would have worked in with Elon Musk's brand of like shit poster and like meme lord. He could have just done 420 on there, and I think that would have been fine. But 4,000, I guess I'll take 4,000. I guess that's fine. I'm not going to say like, you should have only given us 3,000. I guess I'll take 4,000. But if you're doing 4,000 character tweets on Twitter, Jesus Christ, that's an essay, dude. You literally put an essay on Twitter. That's absurd. Let's continue on. Let's take a little left turn here. The U.S. added 517,000 jobs in January as employers drove an unexpected hiring surge. I think... And it's interesting because it's not just like, yeah, okay, it was like their Christmas rally and stuff like that, but it blew the Dow Jones estimates out of the water. The estimates were 187,000 1,000 people versus the 517,000 actually reported. That being said, I do want to take a look at the U6 index and see what the unemployment rate still is for the U6 index. So for those that don't know, if you're taking a look at the unemployment rate, typically what the US goes off of is the U3 index. So if we take a look at U3 versus U6, U3, bada boom, bada bing, let's just pull up Investopedia. So U3 unemployment it measures the number of people who are jobless but actively seeking employment. So people that were laid off, but they're still looking for a job. We're in between jobs right now. That's U3. U6 includes everyone not accounted for in the U3 rate. So discouraged, underemployed, and unemployed workers in this country. So the U6 index, or the U6 unemployment rate, basically takes everyone into account. So that's basically anyone who's not working right now. And if we take a look at the U6 unemployment rate, from January, or from December of 2022, it was at 6.4%. In January of 2023, where we had record jobs, a record low unemployment since May of 1969, the U6 unemployment rate rose by 1%. It's now at 7.4%. So for every 100 people in America, there are 7.4 people that are not working. It is lower than the long-term average of 10.28%, to be fair. But, dude, it's crazy, man. It's obviously less than COVID. In April of 2020, it was 22.4%. So it's definitely lower than that. But it is still, it's increasing. It's definitely increasing. So, yeah, I think the unemployment rate and record low unemployment and employment, that was just a propaganda kind of thing that they were giving us. Technically the U3 index is showing that, but the unemployment rate, the real unemployment rate actually rose last month. There are actually less people working now. So just take that into account. Lastly, I want to end with this. This one really caught my eye. 35% of millionaires think that retirement is, quote, going to take a miracle, a report finds. Fewer Americans feel confident about their financial well-being and retirement plans amid persistent high inflation and market volatility. Bada boom. Let's go down a little further here. It was giving us something. So there are basically 8 million millionaires in America right now that believe that it's going to take a miracle for them to retire. I do think that this type of view is definitely driven and propagated by market volatility and high inflation happening. So I definitely think over the long term, stuff is probably going to get more expensive, and people are probably going to have less money because stuff gets more expensive. But if you have investments, those investments are still going to grow, I think. And we're coming out of one of the biggest bull markets in history. It's literally called the everything bubble. That's what they called from 2020 to 2022, or 2021, start of 2022. But yeah, they called it the everything bubble. It's going to pop, man. Everything went up boku bucks. It was crazy, but it's all good because we're probably going to go through with that contraction period that we're already in. It's probably going to keep going. But we're just going to buy more. I'm going to buy more. We're going to have a good time. We're going to make a bunch of money. We are going to get wealthy. And we're going to be all enjoying the Dylan Ollie experience while that's going down. And I think that brings us to the end of the Dylan Ollie experience tonight. Let's do some plugs right here. So twitch.tv/RealDMH. That's what half of y'all are watching me on right now. Just give me a follow. Real DMH on here. We're always doing our midweek market recap stuff. We're doing our end of the week market recap stuff sometimes. We are going to be doing, and I guess we can do a little announcement right here. Frenzy is doing a day one world's first attempt in the Lightfall raid on March 10th. starting at 8:30 Pacific Standard Time. That's going to be when the festivities kick off. The actual raid's going to launch at 9 a.m. So we're just going to be vibing for about 30 minutes, getting the Destiny juices flowing, if you will. So yeah, be sure to tune in for that. Also, it's going to be also happening on YouTube, youtube.com/@DylanHoley. Be sure to give me a subscribe. Be sure to subscribe, man. Come on. We got content up. We're going to have more content up. And of course, you'll be able to see me stream it. Lastly, of course, Twitter. @RealDylanHoley. We're always giving you just the breaking news. Like we scour the internet at the Dylan Holey Experience, trying to give you breaking news, important news that you guys really do need to see. And of course, we're also going to be letting you know when we go live, doing our midweek market recaps and any other live streams that we go live for. And of course, daily key takeaways whenever the market's open. The Dylan Holey Experience is giving you key takeaways on that market after stock market close. And yeah, man. Real Dylan Holey is it really is probably like my favorite to do the content stuff on, because we can ship post and we talk to our friends, we talk about Destiny, we talk about politics, we talk about finance and entertainment. It's fun, man. It's a grand old time. But there we go, midweek market recap. Thank you all so much for watching, and y'all have a great night.